And if you're buying now and you're listening to this and you say, oh, he said it's quality long-term, and exactly in 10 years you thought you will sell and that's when the crash hit, guess what? Be patient. Just be patient. People can, easier said than done. I can vouch for myself. I was patient because it was not a pleasant feeling to know that a property that you paid 190 for is now worth 84,500. That's not a pleasant feeling. But at the same time that I was seeing this, I also realized that the rent is improving. And I asked myself, are you in rush? Is there any rush? Do you need to sell? Okay. I told myself, be patient. Right. Did you buy well? Good place, good location, all those things that I keep telling others? Absolutely.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Dani Beit-Or is a residential real estate investor and mentor with experience in more than 5,000 units in the past 20 years. Dani, welcome to the show.
Thank you for having me. Thank you. Pleasure.
That's a lot of residential property, 5,000 units. Maybe we'll get to where that number comes from here a little bit later in the show. There are 3 questions, though, I ask every guest. Where did you start? Where are you now? And how did you get there in 90 seconds or less?
Yes. So I'm originally from Israel, grew up in Israel, served in the Israeli Special Forces. I realized early on after getting my engineering degree that working for corporate Israel is not the way I want to go. It's not the way it's going to advance me financially. So I started looking into different investments. While in Tel Aviv, discovered the US residential investment, fell in love with it, moved in 2004 after doing 2 or 3 small investments to this country, continued investing in residential real estate, and there started working with investors, helping them do pretty much the same what I was doing, putting tracks for myself and letting others ride those tracks, invest in different US metros. So I'm now in Southern California. I've been 10 years in Northern California, 18 years in this country. 100% of my time when I'm not with my family and friends is devoted to working on investment properties, helping others invest in residential properties throughout different US metros.
That's really, really intriguing. So when you say that brings up a lot of questions, which I'm just going to maybe ask it simply and say, how?
How what?
How are you helping other people invest in all of these metros?
Yeah. So what I found over the years is a lot of people, especially most of my clients are people who live in the West Coast, the majority of them. In Europe, in the East Coast, but the majority is anywhere from Seattle to San Diego. A lot of them come to the realization that real estate is very beneficial. They understand that. That's kind of like the starting point, right. The idea, right? The vision. Then the next thing they do, and I've been doing it for 18 years, they look around and they say, wait, this $1 million home rents for $3,000, or $750,000 home rents for $2,500. The math doesn't work.
Right.
I heard that in other parts of the country, it's not that expensive and it rents better. And then they come to the realization, where should I go? How should I buy? Who should I work with? How can I trust? Who can I trust? How can I overcome all the challenges of lending and management? And that's where we come in. We come in to close I call it the knowledge gap, to handhold people in the process of making those decisions, from idea to actually full execution of ownership. And then we also close the operational gap, maybe I should put it here, and saying, okay, we vet teams of property managers very carefully. We vet realtors and we train them very carefully. We handpick vendors, we handpick lenders. So we close that operational gap. So we're not just knowledge and advisors like go invest in real estate. We say, we're going to help you with the knowledge and fear and concerns and issues before you start, during the process of buying and post-purchase. But also we have the teams, the properties that will take you all the way through, I would say all the way to ownership, but many of my clients have been with me for so many years. They're coming back to do a 1031 exchange, to sell, to grow further. So it always continues. This is a long-term relationship. People
Right.
tend to accumulate houses over the years and not buy all at once and kind of stop. That's just a
Right.
tendency. Yeah.
That's really intriguing. Why did you decide to go that route as opposed to just building a portfolio yourself?
I've started by building a portfolio to myself, and I'm still, it never stops. But for me, I fell in love with real estate, the U.S. real estate. I found that I'm good at operational. I'm good at and working with people. I'm good with helping people, advising them, and I just felt that this is my, in a way, my, I don't know if to call it my calling, but like I have had probably well over 10,000 one-on-one conversation with actual investors and potential investors. I'm just talking about the initial conversation, not the ongoing. Well over 10,000 for those 18 years. And I'm, the next call that is later, that was maybe held on Friday, I felt fresh. Like for me, the fact that I've had conversation like this one for more than 10,000 times, similar conversation, and I'm not completely like, oh, not again. On the contrary, I'm excited, I'm energetic. That kind of tells me I'm in the right spot with myself, first of all. And then I think that projected, to the people that I speak with.
Right. I love it. I love
Full
it.
disclosure, not all 10,000 became clients.
You'd be selling a different book if that were the case.
Oh my God.
Let's talk about this. I mean, some of the questions, that we hear in commercial real estate and residential real estate is there a crash coming? Is there a price decline? I mean, because residential real estate and commercial are tied, and when one declines, probably both do in their own different ways. But talk to us about what you see coming and what you're telling people when that topic comes up.
So I'll divide it into two. First of all, I want to emphasize I'm in the real estate or the residential kind of category, right? So so I'll tell you in a second what I think about what's coming, but I want to tell you first how I mitigate, because if there's one thing I can tell you and the people who will listen to this, I have no idea if we're going into a crash, when we're going into a crash. I only know this. I've started investing in 2002. So 20 years right now, it's when I started. I really picked up the pace in 2004. And guess what? I went into the crash of 2008 personally with multiple properties, but with clients, even more, right? When I say clients, it wasn't my property, but I was there with my clients in the trenches, helping them out of problems, issues, speaking to banks, loan mitigation, short sale, all of that. I've done years of just dealing with that fun part, right, of the industry. So, and that taught me a lot. So for me, the crash of 2008 was a significant. That was my PhD in a way. I came in with experience, not a lot of experience, but some experience, not complete beginner. And that was my PhD in real estate, because that taught me a lot, things that, that I never thought I would know. But I have learned, or I've seen, and I've researched it, I read it myself, that in this country, normally every 10 years we have a slowdown, right? Every 10 years or so. Right now, we are late into the slowdown, because it's been 12, 13 years. So it should be coming. So I am, after the crash, one of the things that I started kind of, in my mind conceptually doing is saying, the next one is coming, right? This is something I started with my DNA in 2009, 10. Starting is if the next one is coming and I don't know when, let's prepare for it. How do I prepare for it? Well, I buy in growing markets. I buy quality real estate, not crappy real estate. I buy in growth, growth of population and jobs, or indication of this is where happening. I buy where the numbers make sense. So I do a lot of decisions along the way. I call it medium-sized importance decisions, not small, not insignificant, and not everything is critical in the process of, kind of picking up the areas, the properties, the due diligence, the evaluation from macro to micro, etc. And all those decisions are putting me on a path that if I buy quality in a potentially resilient market, or potentially has more strength, potential for resilience when the next one is coming, and I'm holding it long term, there's a very good chances I will survive well the next crash or the next downturn. No guarantees, But I am not in the guaranteeing or promising business. I am in the risk management, mitigation, reducing risk kind of a business. And I am putting myself and my clients on a path of saying, let's buy quality, let's analyze well, let's evaluate correctly. In good markets, we are probably going to be okay, even when the next downturn hits. Now, as someone who's been through that point, right, the bottom, I can tell you that what I have seen is that while my house, that example, one of my houses that was purchased for close for $200,000 in Orlando, that was almost the purchase price went all the way to 84,500, so less than half. Not a pleasant day, right? Era, period. But rents kept going up, vacancy kept going down, and that house over time, being patient, it was bought well in a good metro, in a good location in the metro, in a good community, not a luxury home, not anything fancy, just a nice middle class home in a good area. And slowly it came back and exceeded, right? So I was patient. So quality, time, right? That works very well. I think those are the most mitigating factors we can have in a resilient market. And be patient. You gotta be patient. Real estate, especially bought with a mortgage, loves time. Be patient. And if you're buying now and you're listening to this and you say, oh, he said it's quality long term, and exactly in 10 years you thought you will sell and that's when the crash hit, guess what? Be patient. Just be patient. People can, easier said than done. I can vouch for myself. I was patient because it was not a pleasant feeling to know that a property that you paid 190 for is now worth 84,500. That's not a pleasant feeling. But at the same time that I was seeing this, I also realized that the rent is improving, and I asked myself, are you in rush? Is there any rush? Do you need to sell? Okay, I told myself, be patient. Right. Did you buy well? Good place, good location, all those things that I keep telling others? Absolutely. Right. And the house is obviously, much higher than this right now. So it's and I think that's why real estate always was a good fit for me, because in stocks, you get nervous. What do? Click, right? Right. In real estate, you get nervous, you do click and nothing happens. You need to wait 30 days, 45 days, 60 days, if at all, for something to materialize. So you have to be patient, right?
That's it. Yeah. And I think that's the beauty of buying for cash flow, is that we don't really care. I mean, I do care what the valuation is, but I don't really care as long as it's making money every month. Like, okay, so you say it's worth 200,000 or it's worth 84.5. Is it still making money every month? All right. Like, just that allows you to sleep at night. Talk to me about, is now a good time to buy? I mean, what do you think?
So I got to tell you, 18 years in this country, there was never a time we didn't buy. Never. Not a single period of time. 18 years of a buyer. I've been buying properties, working with my clients, 18 years. I think it's more about discipline, analysis, evaluation, doing the work properly. I can tell you right now, 5 minutes before you and I started this conversation, I wrapped up a call with one of my international buyers. For the first time, we just went over the inspection report that took place. Was it yesterday or the day before? I can't remember. Maybe yesterday. And he's nervous, right? Because he's not familiar with the construction, with the material, with the. And I told him, we went over the report. I told him what I think. We called the inspector together. This is 10, 15, 20 minutes ago. We had a conference call with the inspector. We went over the report. I told him my opinion. And then I said, I want you to know something. If you feel nervous, stressed, a lot of uncertainty, no problem. Walk away from this house. No problem at all. I can tell you, I have buyers that will take it because I know my buyers list. But he's maybe too nervous. The house is, by the way, 1976. The report was very good relatively to the, it was good. It was good objectively, and it was good even for this age of a house. But still, he's nervous. So I told him, it's okay. You don't have to buy this house. Yeah. Nothing wrong with the house, by the way. Absolutely. I mean, just cosmetics and stuff, and as you would expect. But for him, it's the first one. It's a little bit, nervous thing.
What are you telling people to do on debt right now?
It's an excellent question. So let me tell you, first of all, what I wish for. I want interest rate to continue going up, and if possible, faster. And I'll tell you why. Because people think this is counterintuitive. It is, but it's not. And this is why. So we are in a period where there's a lot of demand and a lot of shortage, right? So there's supply and demand is really the challenge here. Many buyers, not enough properties, a lot of competition in the residential, almost every metro around the country, almost everywhere. Very tough to be a buyer, right? Like I told you earlier, I am a buyer all the time. Like I am 95% buyer, 5% seller, right? Or maybe 19-10. So I want to continue buying. I want easier time for myself and my investors to buy. So I tell them, I hope that the interest rate will go up, it will maybe move away some buyers because they're saying, oh my God, this is going from a year ago, it was 3%, now it's 4%. Oh my God, no. Well, in my mind, 4% is cheap. In my mind, in my experience, 5% is still, maybe not as cheap, but not that expensive. You know what? Hopefully, if the interest rate goes up, more buyers will say, we're not buying. That will make it easier for us to buy. And I tell my investors, so let's assume it's 5%. And we are buying a property at 5%. Oh my God, the cash flow is tight. Yes, hang in there. Most likely, within 3, 4, 5, 6, 7 years, something will happen and you will refinance to a lower rate. But let's lock down the property, the quality one. Hang in there, be patient, again with the patient, and we will probably reposition or improve your finances. So you may start with few years of a more tight cash flow, and over time, hopefully, the rent will go up, creep up like it usually does, and the rate at some point will go down, and you lock yourself into a good house. So it's going to be a little bit tougher on the cash flow. Guess so what? Be patient, long-term quality, easy. A lot of people don't get that, right? So simple, still not hard to execute.
Yeah, absolutely. Do you prefer 15 or 30-year debt, or what are you looking at right now? What do you like to do?
30, if I can do 40 or 50, I'll take that too.
Sure.
When we're talking, see, I was born in Israel, right? When you come to this country and you see those amazing mortgages, they do not exist in many other countries. They're unindexed, right? So when we borrow now, and our principal is not indexed to the cost of living, this is crazy, right? What does it mean? There's erosion of the principal, right? So that's why I rather take with a cheap rate, even 4%, I see it as cheap. So 30 years, it is a little bit higher rate, but, typically, but the cash flow is going to suffer less because the amortization schedule, the payments are lower. There's a longer term erosion of the principal, also a benefit. Plus, if you really want to pay your 30 mortgage in 25 years or 20 years, you want to be flexible, easy. It's super difficult to pay your 15-year mortgage in 20.
Right.
So I love the flexibility. I love the lower payments for the cash flow. I love the fact that what it does for my principal, it's and by the way, let's face it, most of us would not hang on to the mortgage for 30 years.
No, certainly not. Dani, I've really enjoyed this. Certainly. Thanks for taking the time to break down your business, why you do what you do, and kind of what you see, as you've said it over and over, the right time to buy real estate's right now. You're always in buy mode. And I like the conviction that you have behind that. So that's loads of fun. Thanks for coming on today. Let's jump here into the final 3 questions today. We'll do 3 questions a day. Here's the first one. What is one mistake you can help us avoid, and how would you avoid it?
Wow. I think that a lot of people just jump in and start asking for properties and start asking for joining mailing list. And they don't even take 5 minutes to kind of set their own expectations. What's my budget? What am I looking for? Bedrooms, bathrooms, kind of write down that. I tell my clients, just write what your either ideal deal looks like or your threshold deal looks like. And then when you have your, who says it has to be residential? Who says it has to be out of state? What is your values in terms of the deal you're looking for? You're more on cash flow, you're more on appreciation, yes mortgage, no mortgage. Kind of outline those 10, 15, 20 questions with yourself for 5 minutes with your coffee in the morning or a cup of, like a wine in the evening. Then sign up on the right, databases or everything that comes your way, compare it. Here's a property I'm looking, here's my data set, compare it. If it's irrelevant, shove it away. If it's relevant, explore further. Absolutely. But, just running all over, it usually ends up with doing very little or getting lost.
Right.
Focus.
Hands down. Dani, if our listeners want to get in touch with you or learn more about you, what is the best way to do that?
My web identity everywhere is my company's name, which is Simply Do It. So Facebook, we're Simply Do It. YouTube, we're Simply Do It. Web, Twitter, all of those areas. I'm not necessarily very popular or actively in all the social media, but Simply Do It, just as a catchy name, is where you would normally find us. Our website is shockingly simplydoit.net. So that's very easy. On Facebook, you'll find us too. Get in touch with the website through one of the social media easily. Simply Do It.
Dani, thank you for your time today. I do appreciate it.
My pleasure. Thank you for having me. Thank you for excellent questions.